Now, Afrimat's full-year earnings have risen by 24%. This as its diversification strategy pays off amid economic and commodity fluctuations. And joining me now to delve into its performance in greater detail is Afrimat CEO Andries van Heerden. Thank you so much for your time. Andries, double-digit growth all the way from the top line to the bottom line. Just paint a picture of the key highlights here.
Yes, Nati, thank you. It was a fantastic year. We had a very, very good run in our commodities business. We saw the anthracite business in Nkomati anthracite mine coming through in the second half quite well. Our iron ore business, did well. We had a good growth on the previous year on the domestic side, and our construction materials business really actually shot the lights out with more than 100% growth year on year in operating profit. So all around a very good performance of the business, and we're very, very happy with how it performed.
Well, let's zoom into one of those highlights. You mentioned the bulk commodities segment. Talk to me about specifically the iron ore market there. You did mention that the prices did dip in the last quarter of the year, but would you say that pricing there is still favorable?
Yeah, the iron ore price is still around about $115 a ton, which is a very good price for us. It's at those price levels, we have a very good business.
All right. Well, still on that, because of course, one of the major drivers of sales volumes is rail. And of course, there were a few challenges. You mentioned that locally you did get the additional iron ore that you needed to get out through trucking instead of rail. How has that cost implication filtered through to the numbers? Has it significantly filtered through?
Yeah. So the trucking was done only on the domestic sales to our domestic customer. And we sell to our customer at mine gate, so that cost impact was really for ArcelorMittal, and they had to absorb that cost. And I'm not exactly sure what the difference between the road transport cost and their rail tariffs are. I obviously don't know what their rail tariffs were. So yeah, and on the export line, you cannot truck it economically. So we only used rail on the export line.
Yeah, and of course, really, that's the sales volumes there are under pressure. And I'm wondering, with these recent developments that we have seen on Transnet, if things have gotten better or not.
Yeah, so we did see a little bit of a reduction in volumes on the export line. The new management team in Transnet is really trying very hard, and we are very positive about their approach. Unfortunately, the backlog is quite severe, and I don't think it's going to. We're going to see a drastic improvement in the system, in the short term. But there is a very good cooperation from the current Transnet management and the industry as a whole to try and improve the system and get it performing better. Yeah. So I think over the longer term, we'll see an improvement.
Well, you spoke about the construction materials segment really shooting the lights out there. Just talk to us about the underlying drivers over there, because, I mean, we know that this is, one division of the economy that still kind of has underlying pressure.
Yeah, so where we see a lot of activity is in the road building sector as well as in the rail sector. So on the road building side, we've seen Sunroll rolling out more projects, and we see that there's better execution at that level. Also, once again, under the new leadership of Reggie Damana and his team. And then on the rail side, with more ballast styles, ballast is those rocks that are put under the rail. That we've seen quite a sharp increase in that, which bodes well, because that means that the rail track systems are being maintained better.
All right. Well, of course, Andries, as much as you do have this diversification element to your business, I would say that, looking at, for example, what we saw with the industrial minerals business, that the business really is not immune to the macroeconomic headwinds on that front. Talk to me about, the leakage of these challenges that you have seen, and would you say that they are negligible?
Yeah. So the industrial minerals business is a very, very small part of our business, fortunately. But that is the business that is most susceptible to impacts from load shedding, both on our own operations, and we've pretty much shielded that business now with our own generating capacity on that side. But also our customers, they are the industrial customers, and when especially at the higher levels or higher stages of load shedding, they tend to pull back on production, and that really impacts our sales then.
All right. Well, let's talk about Lafarge SA. Has that integration started? And if so, how is it filtering through to the business so far?
Yeah, so we officially took over on the 23rd of April, so we're not even a month in there yet. We're very excited. We think it's a very good business. It has been neglected for a long time, so at the moment the business is not performing well. So it's another turnaround for us, but we've done a couple of turnarounds over the years. And we see enormous potential in this business. The quarries that is part of the acquisition fits in very well with our existing quarrying operations, and we actually think it's very good assets. The fly ash business is also very good. The cement business needs a bit of attention and is currently not performing well, but we're pretty certain that we can turn that as well.
All right. Well, as we wrap up the conversation, Andries, what will inform your capital allocation decisions as you've gone into now this new financial year?
Yeah, I think as always, we look at the return on capital. If you look at our latest set of numbers, our return on net assets is just under 26%. So it is important for us to have a very good return on capital. And at the moment, we have very exciting projects with Lafarge. We're still busy with the ramp up in Komati. It's already performing well. We want to take it further. And we also have a phosphate project called Glenover, which we also want to bring, really bring it to market this year. And the capital that we employ further we'll really just make sure that we maintain that return rate that we've had over the last couple of years.
All right. Well, thank you so much for your time and just detailing those numbers that we saw coming out of Afrimat, Andries. That was Afrimat CEO Andries van Heerden.